NBIS. Today we're talking about one of the hottest AI infrastructure stocks in the market right now. One analyst believes this stock could reach $307 by the end of 2026. And after looking at the numbers, the argument is honestly pretty interesting. The reason people are paying so much attention to Nebius is because this company is not being valued like a normal cloud business anymore. Most investors normally value cloud companies using simple revenue multiples. But according to this analyst, that approach completely misses the bigger picture with Nebius. Why? Because Nebius is more than just an AI cloud company. The business includes AI cloud infrastructure, rentals, strategic investments in companies like ClickHouse, Avride, Toloka, and Triple10. That's why the analyst says NBIS should be valued using a sum of the parts model. In simple terms, instead of valuing the entire company as one business, you value every major piece separately and combine them together. Now let's talk about the core AI infrastructure business. Nebius rents GPU computing power to AI companies, and one of the most important metrics here is revenue generated per megawatt of active power. The analyst believes the industry benchmark is around $10 million per megawatt. Text, $1 million per megawatt. $10 million per megawatt. The base case assumes Nebius reaches around 1.5 gigawatts of active power by 2271.5, gigawatts of active power by 2027, 1.5 gigawatts of active power by 2027. If those assumptions hold, the company could justify a much larger valuation than where it trades today. That's where the $307 price target comes from. Now here's where things get even more bullish. The analyst believes Nebius may eventually outperform some competitors because it's deploying newer Blackwell GPUs, demand has stayed extremely strong, customers are signing longer contracts, and the company is building software tools on top of its infrastructure business. That software layer could improve margins over time and make the business even more valuable. Based on those assumptions, the analyst created three scenarios. Bear case around $177, base case around $307, bull case as high as $500. But the AI cloud business is only part of the story. Nebius also owns a valuable stake in ClickHouse, which recently reached a massive valuation in a funding round. The company also has exposure to autonomous driving through Avride, AI data services through Toloka, and education technology through Triple10. So investors are getting exposure to multiple AI-related businesses inside one company. But this investment still comes with serious risks. The biggest risk is an AI spending slowdown. If companies like Meta, Microsoft, Amazon, or Google reduce AI infrastructure spending, growth expectations across the entire sector could weaken quickly. Another major risk is dilution. Nebius needs huge amounts of capital to build data centers and expand GPU capacity, which means more shares could be issued over time. And finally, GPU rental pricing matters a lot. If GPU rental rates fall sharply, future revenue assumptions may need to come down as well. So what's the conclusion? Bulls believe Nebius could become one of the biggest winners in the AI infrastructure race. Bears believe expectations are already becoming too aggressive. But one thing is very clear. The market is no longer treating NBIS like a normal cloud stock. It's being valued like a future AI infrastructure giant.